Welcome back. Well, for the markets, it's turning out to be a steady session now. So up around 52 odd points currently for the Nifty, and we have the mid-cap index, which is up around 120 odd points as well. But let's talk about one specific company. HEG is in focus. It posted what was a good set of Q2 numbers. The company's revenue grew around 23%, while the net profit surged too. To discuss the quarter gone by and the way forward, we have with us Manish Gulati, who's the executive director at HEG, to join in to discuss more on this. Mr. Gulati, thank you very much for taking the time out. Well, the revenue growth was around 23% this quarter. Just give us a sense in terms of what the utilization levels were and how did it compare with the industry? Because earlier you've said that utilization levels can get to around 85%. What was it this quarter? How does it compare?
No. For the 2 quarters gone by, the Q1 and Q2, our capacity utilization has been in the excess of 90%. And the revenue growth which you see quarter on quarter, Q2 versus Q1, yes, we have sold more in Q2 compared to Q1, which you can see in the top line. And through the year, we hope that we should be close to 90%, as compared to the last year, which was close to 80%. So, and if you compare it with the peer group, I can safely say that our capacity utilizations are better.
Okay, so Mr. Gulati, you're outpacing your peers, especially in terms of capacity utilization. Can you give us a volume growth guidance for FY26? And have you been selling, the higher volumes Q2 versus Q1? Has this been done at a higher realization?
First, when it comes to realizations, they are, I would say, they are still at the same level. The top line growth which you see is mainly because of volume, higher volume sold in Q2 versus Q1. And if you ask me to compare the last year volume growth versus this, so the last year it was close to 80%, and FY26, we hope to be close to 90%. For the first half, it's more than 90%, it's 90 plus. So I think by when the balance 2 quarters are done, we should be close to 90%. So that's the kind of volume growth. But as I said, the prices are still stagnating for the last 2 quarters.
Okay, so prices are still stagnating for the past 2 quarters, but you are expecting a volume uptake. Those are the Bajaj Finserv numbers. The revenue is up around 11 odd %. That's obviously Bajaj Finance plus the insurance arm in terms of the numbers that Finserv is reporting. Net profit is up around 7.5 odd % to 2,244 crores. More details in terms of the internals, but as you can see, both the twins have been on the downside in today's trading session, primarily reacting to Bajaj Finance numbers. But Mr. Gulati, just getting back to the conversation, if you could give us a sense in terms of how the graphite electrode prices have moved. Prices were expected to be flattish in Q2. How exactly have they moved? And what is the way forward?
Prices have been quite flattish between Q1 and Q2. And although we were expecting prices uptake in the second half, but it's still taking time with the kind of steel production we are looking at. There's still a decline in the first 9 months of calendar year 25 to 24. If we compare, there's a decline, 1.5, 1.6% decline. And even if we exclude China, it's very, very flattish for the markets we cater to. So we are hoping that in quarters to come, 2-3 quarters later, when the steel production starts to show growth, and ours is derived demand from steel production, particularly from electric arc furnaces. So the demand for graphite electrodes should go up. And the new electric arc furnaces which are coming, which we can see, they're under construction. About 11-12 have come. 20 million metric tons is expected soon in the next 1.5 years. So we are hoping that in times to come, there'll be an uptick in demand.
Understood that. Give us a sense, you said that you're hoping for an uptick in demand. Give us a sense of the impact that the US tariffs have had, especially as far as the export order book is concerned. We understand 10 to 12% of the total production goes there. So despite the fact that you've been operating at 90% plus capacity utilization, has exports continued to remain a headwind?
Well, we are also watching the situation, and we are hoping that the tariff of today, 50%, settles down to a more reasonable level as it has been settling down with other countries. So that's what we are looking at. 2025 is almost getting over, and 2026, we hope that in the next 1 month, 2 months, 3 months, it settles down and our sales continue as before to US. Even if it is not, as I've said in the past, that our markets are very well diversified. We are dealing with supplying to almost 35 countries. That includes Europe, Middle East, Southeast Asia, almost everywhere. And US accounts for 10 to 12% of our sales. So we are, I think, quite geared up to handle the tariff situation. Of course, it will be, it's a very important market for us.
Okay, all right. More on that later, Mr. Gulati. We've run out of time. Thank you very much for joining in and speaking with us. So that's the management of HEG, stock up 4.5%. We'll take a break. Up next, we'll get you an exclusive conversation with the management of Swiggy.